The weekly time frame for GME closed with a pretty bearish continuation signal, but while it looks like it could be a great decline, a macro time frame signal is displaying to us an area we can use as a potential bounce zone to gather ourselves a larger prior bar retrace. Let's pop open the hood to catch an edge over the coming sessions. Welcome back to the channel on this silly Saturday. This is ARCa, and let's pop in the GameStop. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at GME here on the 8-hour chart, and I'm going to display to you what we spoke of the last time we were here meeting on a live situation, on the live stream, sorry. We noticed here that we could face a bottom side in the loading zone of around that area of 24.01, okay? And the top area would have been a resistance of 24.38. To beat the 24.38 would mean that price action would likely go to the resistances of this area here, 24.60 to 24.70. And this is the implied direction that we spoke of. I'm going to share with you something very interesting. If we put the candles on a line chart, I want to show to you what that looks like, right? So go ahead and notice here what price action did after we actually met this upside first, right? We got the downside second to 3. We got the downside second to 3. We got the second upside, and that would be, we got the fourth iteration here, which would be that top end of the two targets of 24.60 to 24.70. We got the resistance, right? And now price action declined or came back in to validate or maybe confirm that area that we bounced from at 24.01. Okay, so what I want to talk to you about here is actually a different type of signal. So for that, I want to bring you back to this chart. You know what? Let me just go ahead and put that back in the monthly chart. I just want to make sure that I had something here. No, nothing at all. Okay, so number one, the continuation to the downside signal is this, right? Shooting star formation here, prior weekly close. We didn't actually get the 50% prior bar retrace that we wanted all the way up to the potential 26.93 to 27.50-ish. We actually just retraced to the prior bar's opening, right, to around 25.99, and then we declined and continued. Usually when you have a shooting star like this and you have a red candle printed in this fashion, that usually means continuation to the downside. Okay, now, how far down though? Because that does look like a pretty credible shooting star formation, signaling a massive wick or shadow right towards that upside, and also signaling a continuation candle, weekly time frame, by the way, closing below the prior bar's close and open, of course, and completely outside of it. All right, so if we do have a downside, that looks like it could fall pretty deep, right? But I gotta show you the monthly time frame right now because the monthly is about to close. We have 3 days and 15 hours to close the monthly time frame, which is literally around the corner, right? We're about to jump into August, and I got to show you this right over here, right? So, first of all, notice that this candle right here, this is our month. We opened at 23.34. This is how we were able to determine that, you know, when we opened this, if you remember here, if you've been watching me here for a while, then you'll remember this, right? We spoke about a 30 to 50% retrace of this prior bar, which ended up literally within $30 to around $33. We got that $30. We're good, right? Now, what I'm thinking here is that we have relevance within some supports. Let me point them out. Let me draw them out for us, okay? So this bottom side here, where the bar opened at 23.35, to this area here where the candle closed on this month, the May candle, right? So right down here, we have to make sure to mark that off. Of course, we have a secondary area that we can reach. Yep, you know what? We're going to just go ahead and make sure to leave it there as with receipts, right? Just in case price action goes there. We want to make sure to keep these things cataloged anyway, right? But this could be an area where price action may actually decline, right? And I will say that there are some areas here that may actually have the price action consider a potential stop around there, right? So first of all, yes, we do have this wick right over here, this wick right down here. That's around your 23.47, right? We're going to make a tiny little line there just in case. That's going to be one of your earlier signals in case price action comes back down and starts supporting from one of those candles there because of the relevance, right? It's no problem. It's just really, it's all rhyming price action is all that we're doing here, right? So let's go ahead and put down the receipts so far on what we have here displayed, right? Just so that you guys can take, like always, right? I always present the receipts to you so that you could present or so that you could take your screenshots so that you know what the play is doing, right? Let me get rid of this bottom one here and we'll be good to go. Okay, so if there is an upside continuation, before we get that monthly drop into this, right? Because we're going to close in 3 days. I will say that the upside may be limited due to the weekly candle that we just closed, right? Let me show you what I mean by that. So if we take a measurement of that weekly bar that we just closed, we can see that we can face an upside here to roughly about 24.65. Now, if we leave a line there, come back to the monthly time frame, then that shows you a very critical area of resistance, this prior bar's close. So now we adjust that target to that prior bar close, which right here in the OHLC, it tells us that it's 24.69. We have it now at 24.69, and that could be the resistance area that we can face before coming back down to test this area first. I think there's a higher probability of a bounce between 23.35 to 23.13, opposing the 22.57 to 22.32. Okay, so always keep in mind that 23.47 because we do have some relevant wicks and shadows up there, right? Okay, so that's presently the thesis. But now, which side first? Are we going upside and downside, or are we going downside then upside? Well, we're just going to have to take a look at our immediate short-term time frame and see volatility versus momentum and see how that's presently looking. Now that you can kind of observe where we are in price action, take a look at it, that we marked off the areas, right? The receipts that you just saw here. Take a look at where we're sitting right now. Right? It looks like we've consolidated in this chop box several times, right? So it looks like we're kind of doing that right now. Resisting from this supporting from this bottom side here, resisting from this top side here, coming back down, right? It looks like a chop zone. And I will say, price action tends to behave that way a lot of the times. Like we have a resistance top right over here. We have a support bottom right down here at that November 21st 2-hour candle, and this is the top end. I'm sorry, the one that I spoke of just before that was the Monday, February 6th wick top, right? That came up all the way to around what? 24.89, and that's the resistance that we're facing right now. Aside, a bunch of other candles historically have faced that 24.69 I would say approximate zone. Right. So, yes, let's just go ahead and take a look at volatility versus momentum in a very, very granular manner here. Let's even go down all the way to the 5-minute time frame. 5-minute time frame is already suggesting volatility expansion with a downside pivot. That stochastic momentum is sitting just below 20% in the oversold area. Right. So, yes, it does still. It's still valid here. So I can think that if the 5-minute time frame has around a 3 cent average true range, sure, that could definitely come down to the prior day's post-market low at around 23.72. Now, if we start looking at that 23.72, what is it close to? Well, 23.47. So that's also part of our 3 cent average true range on a 5-minute time frame. It already is rhyming with that 23.47. I gotta say that the 5-minute to the 10-minute downside may actually just get us that initial downside right off the bat, 24 cents to around the, let's see, 20, I will say that 3 cents actually, no, between the 5-minute and the 10-minute, we could reach all the way down to 22.32 and still be okay. All right, you guys. So yeah, just keep an eye on both of these zones, right? Bottom zone, 22.32 to 22.57. Top zone, 23.13 to 23.35. The 5-10 minute, they're cascading into each other with downside pivots and some volatility expansion, right? The 10-minute time frame volatility expansion is barely starting from a critical area of contraction below the 2%. Now, the 15-minute time frame looks to be a little corrective. EMA 3 on the stochastic momentum has an upside pivot, and the SMA 14 still has that downside pivot. Let's see the 30-minute. it looks pretty much oversold here, but it does have a little bit of a dead cat bounce happening on that stochastic momentum, right? Shows that it could still consider a downside. Now, the hourly time frame is showing that it could be pivoting here, okay? So I get it. I see that we could really be facing an immediate short-term downside. Now, as we go into the 2 hour, right? This is your bi-hourly time frame. You can see that there's a huge thrust towards the upside and barely any downside. As we move to the 3 and 4 hour, you're going to notice that this downside is going to diminish. It's not going to exist anymore. Take a look at the 4 hour, not existent anymore, right? This is already this is already inside of that gravitational zone for a continuation to the upside. We just need a little more volatility here, and that definitely will get a push. 6 hour time frame showing signs of expansion with an upside pivot. Very nice. The 8 hour time frame also showing an upside bias on that stochastic momentum indicator down from the oversold percentile, pivoting from 7.5% and up. Now the 12 hour time frame also with an upside pivot, and the daily time frame still has not read the post hours action on Friday, right? So yeah, I do think that we have an immediate short-term downside. I do believe that we can reach those two areas that I just pointed out to you as a zone of potential loading, right, before facing an upside. Now, remember, we do have, per the daily time frame, we also have that retracement as well. So this is a shooting star formation. The likelihood is that we can face a little bit of an upside, right? Well, around to this is going to be after we face the downside, right? So this would be literally the gap that we're facing on a daily time frame. It's confluent to the 5-minute time frame that we just talked about, by the way. This would be it right in here, right? Let me just go ahead and adjust that target, and it's showing here 2401 to 2395. Of course, things can wick a little bit lower. Take a look at that day right here with a wick down to that area of what? 2393, and we're already observing targets to the downside that are consistent of what? Right, here we go. Let's go back to that chart and see what those are. Yeah. So the first downside here, we could face 2393. The second upside, the second upside would just be to validate 2413 before that continuation, right? So I'm giving you the really granular look, right? Tiny look using a large time frame. First, remember, we're talking about the downside here, down to the areas of around 2393, maybe the top of that gap, 2402, come back, validate 2413 as resistance. We would then come into this zone of, whichever one of these zones down here, and bounce from this area to the upside. Of course, from here, there's going to be a lot of ebb and flow. There's going to be a bunch of resistances that we need to validate, but there could be a continuation to the 50% retrace of first the daily time frame candle, which could be located right at about 2446, and then the weekly retrace, which could be located right at about that $24.69 zone. Okay, so I do think that we are about to set a triple bottom formation here for an upside continuation, okay? So heads up on the markets, please be very careful with the way you play, right? So I got to tell you guys, the reason why I know this is because I am an instructor, and due to high demand, that now that I'm finishing literally my 5th track of master students, now we're way over 262 students on total, right? I'm finishing them off now. I'm going to restart that master's course, that mentorship program for the beginners, charting and trading crash course. Okay, so make sure to get in touch with me right here, right? ArcMastersCourse at gmail.com. Right, just like this. Make sure to reach out to me. No excuses, right? Let's make sure to make a change to our trading careers. I'll go ahead and give you all the pertinent information, the syllabus disclaimer, and all that good stuff pertinent to that course. Okay, you guys, so make sure to reach out to me right there. And for those of you who are already advanced traders, get in touch with me, right? Make sure to hit those links on the left. Join the ARCa Bulls trading team. We are trading the financial markets every single day live together. I will tell you that my personal week, just this week that just passed, guys, this has been one of the largest weeks that I've ever traded. I have traded over 1,000% in gains, and many of my other analysts and other ARCa Bulls trading members also got hundreds upon hundreds of percent together this week, right? And we are not done. We're just getting started. We have around 240 members already joined up inside of that Discord, so make sure to join right away. I want to see you there. No excuses. Remember, you guys, I think this is a pretty good place for me to leave off the video. If any questions, you know where to reach me. So let's go ahead and get this thing going. That master's course should be starting in around 3 to 4 weeks. All right, team? Love you all. We'll talk very, very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as it cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your weekend, and I will catch you at the bell on Monday. Adios!